Hello, beautiful people, and welcome to another brand new edition of the ITU Forex class. In this week's episode, we're actually going to be talking about the ADX indicator. So, we're going to be talking about how to use the ADX indicator to identify the strength of a trend in the Forex markets, okay? So, basically, without wasting any more of your precious time, the ADX indicator is actually a technical indicator which is primarily used to identify the strength of a trend. Unlike what most inexperienced traders think about the ADX indicator, it actually doesn't tell you the direction of a trend. So, for example, if you add the ADX indicator on the chart, it's not as if when you see the ADX rising, that's showing you that we're having a bullish trend in the market. Quite the contrary. The ADX indicator is actually non-direction. Let's say directionless to some extent, because it just measures the strength of a trend in any direction. The trend could be a bullish trend, and the ADX, because it's measuring the strength of that trend, if the trend is strengthening by every candle that's forming, then the ADX is going to be sloping to the upside. While if the strength of the trend is decreasing, the ADX is actually going to be sloping to the downside, even if we just came back from a very strong uptrend. In the same vein, we could be in a very strong downtrending market and the ADX could be rising. Why? Because it's not telling us anything about the direction of the trend. It's simply telling us about the strength of the trend. And that's what most experienced traders use the ADX indicator to identify. Okay, so in order to really understand how it works and everything, I'm first going to be showing you exactly how to add it onto your charts. And to do that, what you need to do is to, inside MetaTrader, if you're using the MetaTrader trading platform, just go to the toolbar and click on the Inserts tab, and then hover your mouse's cursor over the indicators category of indicators. You could even click on it, and then click on the trend category of technical indicators. You'd see it right up there, you understand? You can see it here. We have the adaptive moving average. It's not the one. We're talking about the ADX, which is the average directional movement indicator. Indicator. This is the ADX indicator. So in its basic form, I'm going to quickly add it to the charts, and then we're going to do a little bit of customizations to, kind of weed out the less important things and just add the most important. But for now, I want you to see exactly how it is in its default state. So I'm not going to change anything here. The period default is 14, and the style for the main ADX line is actually light green. The plus DI is yellow green, and the minus DI is wheat color here. So we're just going to click on OK, and this is what it looks like on your chart. This is the basic ADX indicator. This is what it looks like. Okay, now what does this, if you take a close look at the chart, what do you notice? What do you notice? And to help you, to make it more visible for you, I've just zoomed out of the chart to make it easy for you to see exactly what I'm trying to get across. Now, when you look at this chart, you see that we had moments where there was a very strong trend in the market. Okay, in this case, we had a moment in time where there was a very strong bearish trend. Okay, let me pick this. Where there was a very strong bearish trend. Okay, and then we also have a moment in the market when we had a very strong bullish trend. Okay, now what does this have to do with anything? Well, for starters, I would like to draw your attention to the reading of the ADX indicator, or let me not say the reading, the direction which the ADX indicator, which is characterized by the main light blue line, the direction it's moving in. So if you pay close attention, when I pick this tool, this is the crosshair tool from the toolbar, and I try to point it out to in and around here, which is where this particular trend, this downtrend, really got its steam from, because you could see that we're forming higher highs and higher lows, higher highs and higher lows. And then all of a sudden, price was struggling to break above this high, to continue forming higher highs and higher lows. And then it reversed and broke below this low, which is the higher low. And then from that moment on, we just kept gradually moving to the downside, okay? So from the moment this bearish trend was in effect, you could see that the ADX indicator, it started moving up, showing us that there's a very strong trend in the market. Because remember, I told you, the ADX does not tell you anything about the direction of the trend. It simply tells you that there's a trend in the market and it shows you the strength of that trend. Okay, we're going to be talking about exactly how to gauge that strength, but then this is just to give you a brief overview of how the ADX indicator works. Okay, so now we've seen a clear example of a trend which is strong in the market and then the ADX rising in value to show you that there's a strong trend in that market. Now, if you take a close look at this, you would see that just like with anything in the market, with trading, trends don't last forever. Okay, so when a trend begins, most times it would move on and it will mature and that trend will be strong and all of that. But then that trend is not going to last forever. There's going to come a point in time where that trend is going to be struggling to continue moving in the same direction with the same strength it was moving with previously. And so this is when you start noticing things like price failing to form, to break below support, or to continue forming lower lows and lower highs in the case of a downtrending market, or to break above resistance and continue forming higher highs and higher lows in the case of an uptrending market, or when we have consolidation and just price is just ranging in between levels of support and resistance. Okay, and this is almost the exact same thing we had here. You can see that in and around here, the trend was very, very strong. And so the ADX was increasing in value. But then at some point in time, the ADX, instead of continuing to increase in value, started to decrease in value. And this is because the trend kind of started to die off little by little. Okay? And so you can see that, before the trend really picked up steam again, and then the ADX showed us that, okay, look, we're going back up because the trend is like it's strengthening. And then all of a sudden, price now started ranging. If I pick my tool here to show you, let me quickly do this, to show you the range I'm talking about, you can see that price just got stuck in between this level of horizontal support and resistance. So price was no longer forming lower lows and lower highs, lower lows and lower highs like it did, continue breaking below support. It now started finding it difficult to break below the support area. So we're having consolidation here. Now, what do you notice on the ADX side of things? You can see that it's no longer rising when this trend was market was stuck in between these levels of horizontal support and resistance. And that's exactly what I meant by the ADX indicator is telling you the strength of a trend. When it's increasing in value, it's telling you that there's a trend in the market, regardless of the direction. And so this is why you want to merge the reading the ADX indicator with something like market structure. Okay? Now, with this trend aside, since we've already seen when it picked up steam and how the ADX reacted and all of that, you can see that this ranging also, it doesn't last forever, because there's going to come a point in time where price is going to break out either to the up or downside. In this case, price later broke up to the upside, and then we started forming again higher highs, higher lows, higher highs and higher lows, which is now telling us that the direction of the trend has shifted from bearish to bullish. Now, what do you notice on the ADX chart? You can see that when we had this breakout, the ADX started increasing in value and slanting to the upside. This is telling us that, look, there's a trend in the market. And then it continued doing this. Whenever we were making the impulsive leg to the upside, the ADX was increasing in value, telling us that there's a trend in the market. And it's a pretty strong trend. But, if you couple it with market structure, which we've talked about countless times in these classes, then you'd know the direction which that trend is in. Because the ADX alone is not going to tell you the direction of the trend. It's only going to tell you that there's a trend in the market. You need something like market structure or moving averages or anything like that to identify the direction of the trend that the ADX is telling you that's a strong trend in the market. Okay? So, now, with that basic explanation out of the way, how do you use the ADX indicator to know when a trend is strong and when the trend is kind of weak and, something that you don't even want to bother about? Well, the way most traders do it, most professionals in this case, they actually use the ADX indicator and they create a level. Okay, so let me quickly show you how I use it personally, okay, with my trading strategy. So this line, I'm actually going to be coloring it black to make it stand out clearly on the charts, okay? And then we're going to be adding a level. And the level is the 25 level. Or let's say, let's just make it 20. Okay, and you'd see why in a little bit. Okay, now we've added this level onto the chart, but then another thing I would want us to do is to make this line a little bit thicker so that it's going to be easy for us to identify, to spot it on the chart. But then I personally don't use the yellow, the plus DI line and the minus DI line. I just focus on the ADX indicator because you could see this was what I was even showing you to tell you the direction of the trend. Okay, and so here we've added the level and we've colored it black to help us see it on the charts clearly. And then we've made the ADX line clear, thicker, okay? So now I'm just going to click on the OK button. And now you can see this is how it looks now. It's a lot cleaner and easier for you to see when the ADX is rising and when the ADX is falling. Now, coming back to the question I asked you before I actually customize this chart, how do professional traders use the ADX indicator to know when there's a trend in the market? Well, some traders take this as whenever the ADX indicator goes from being below the level of 20, which is the horizontal line we added here, the dotted line, when it goes from below this level, this dotted line, this 20 level, to now increasing in value, then we have a pretty strong trend in the market. So in this case, you can see that the ADX line, it sloped below this 20 level, this dotted line, and then when it increased above this line, which is somewhere around here, and broke above the 20 line, this was when we had this clear breakout above this resistance area on this chart. So if you are using market structure in conjunction with trading with the ADX indicator, you would have actually spotted that, look, this particular move has switched from being a downtrending market to an uptrending market, because now price is forming higher highs, okay, and higher lows. Higher highs, higher lows. Higher highs and higher lows. So we are in an uptrending market. So if you were using the ADX indicator to identify when a strong trend is present in the market, you would have been notified in and around this price area. Okay, let me quickly do this. Sorry. Let me quickly do this. You would have been notified in and around this area. Okay. Let me quickly pick this tool. When price broke above this resistance. And the reason why I say this is because you can notice that when I pick this crosshair tool, this is where we had that cross of the ADX indicator going from below 20 to above 20 and sloping to the upside. So this would have corresponded with when this breakout occurred. So if you are using market structure in conjunction with the ADX indicator, this would have clearly shown you that we are in an uptrend. And so depending on how you use the method you use to enter into the market with a trading position during trending conditions, you could have entered into the market after a breakout above a resistance level, or you could have also waited based on waiting for pullbacks to form, and you would have gotten in somewhere around here. So if you got in somewhere around here with the trade after the pullback, you would have taken a trade at the close of this candle with a stop loss below this area. And if you're aiming for a 1:2 or 1:3 risk to reward ratio, in fact, even if you're aiming for a 1:5, you would have easily hit your profit target here. Okay, so this is one way to use the ADX indicator. So again, to recap, how do professional traders use it? This method, how do they use it? Well, what they do is they add the ADX indicator onto their chart, and then they wait for it to go below the level. Okay, this was the example that we used here, and they wait for it to, let me see. Okay, yeah, we have something here again. They wait for the ADX blue line to go below the dotted line, which is the 20 level, which is showing, basically, why do they wait for it to go below that line? They wait for it to go below that line because for it to go below the dotted line, the 20 line in the indicators window, that is showing you that whatever trend that there was in the market has almost completely died off. Because for it to go below that 20 line, it's almost as if there's no strong trend in the market. And so when we wait for it to do this, we're waiting for it to actually show us that there's kind of like a very weak trend in the market. And for whatever reason, if price is able to make the movement on the price chart, which caused the ADX indicator to go from being below this .20 level to crossing above it, then obviously we are beginning to form a trend in a particular direction. And so if we couple this with market structure analysis, we would be able to know which direction that trend is actually forming in. So another example would be somewhere around here. Okay, you can see that the ADX indicator moved from being above the 20 line, showing us that there was kind of like a strong trend in the market, to being below this line. Okay, and then when it went below this line, eventually it broke above it and then started moving to the upside, sloping to the upside, telling us that there's a trend in the market. So what direction is this trend? What direction is this trend? Well, obviously you can see that when you couple this with market structure analysis, we were forming higher highs and before we started forming these higher highs and higher lows, we were forming lows and lower highs, lower lows, and here you could see that this is not a lower high, because for whatever reason, price made a very, very deep pullback, and then it failed to form a low which was lower than this low, and so it formed a higher low. Eventually, it tried to break above this level and it failed, but then even this pullback, you could see that this is the making of a reversal in the market. And so when this happened, price would have easily broke above this resistance, and this would have been showing us that the direction of the trend is to the upside based on market structure. So the way you want to use the ADX indicator is you want to couple it with something like market structure analysis. And some traders find it difficult to read market structure. Okay, and that's no problem. There are lots of ways you can use to identify the direction of the trend. In fact, another way to do it is to use something like moving averages. So to show you a quick example, there are traders out there who would use things like the moving average, a couple of moving averages, to identify the direction of the trend depending on the direction of price. So let me show you an example. Let's say we click on insert. This is adding a moving average onto your charts. This is exactly how you do it. Click on the insert tab on the navigator window. Hover your mouse's cursor over indicators. Click on trend and then click on moving average. Now I'm going to show you a simple strategy that uses 3 moving averages. Let's use exponential moving averages for this example. So the red one is going to be a 200 period exponential moving average. Okay, and then we'll add another one, yet another one. It's still going to be a moving average, but this is going to be a 100 period moving average. Okay, and then we're going to color this something like blue, for example. Leave the lines thick, and then last but not least, we'll add 1/3 moving average, which is going to be our 50 period moving average, and color the line black. Okay, and then click on OK. So the way some traders use this approach is they will wait for the red line to be above the blue line and the blue line to be above the black line. And in this case, if price is below all of them, then we're clearly in a downtrending market, like we had somewhere around here. And the opposite is true for an uptrending market. So when the black line is above the blue line and the blue line is above the red line and price is above all of them, then we're in an uptrending market. So if you're using something like this approach to identify the direction of the trend, well, when price was above this moving averages and the black moving average, which is the 50 moving average, the first one, is above the 100 moving average and the 200 moving average, then obviously we are in an uptrending market. But for someone who is using the ADX indicator to identify the strength of a trend, he's not going to just jump into a trade because the direction of the trend is bullish, because price is above the moving averages and the moving averages are lined up properly in the proper order. He's actually going to wait for the ADX indicator to move from being below these dotted lines to starting to slope above them, and then when he spots something like a pullback or a retracement or a breakout or something, then he's going to take a trade in the direction of that trend, because now he knows the direction of the trend based on the moving averages and how they are aligned and price action. And then the ADX is simply telling him that the strength of the trend in that particular direction is either increasing or decreasing. I hope you get my point. Okay, I hope you get my point. Another use case is you can use the ADX indicator to filter out bad trade setups. So let me give you an example. Let's assume that you identify a trend trading setup. So let's say the rules for your trend trading is you wait for a pullback and then you enter into the market with the trade in the direction of the predominant trend or whatever. Now, if there are times when you take trades in the direction of the trend, but the trend is actually weak at that moment in time. And so when you take those trades, price would just take you out of the market, whipsaw you out of the market because the trend is actually weak. And then eventually, after it takes you out by liquidity or whatever the case might be, it gathers momentum to start moving in the direction you thought it was going to move in. And so one of the use cases of the ADX indicator is to not take a trade, is to use it to filter out bad trades which are based on weak trends. And the way traders use this is they wait for the ADX indicator to clearly cross above either the 20 or the 25 level, even if they see a trade setup, before they're going to take a trade setup in the direction of that trend. Okay? So if that doesn't happen, they're actually not going to take that trade setup. And this is one of the very good uses of the ADX indicator. But before we wrap up the class, I would like to also warn you about some of the common mistakes that inexperienced traders make when they try to use the ADX indicator. Like I told you, the ADX does not tell you the direction of the trend. It simply tells you the strength of the trend. And how does it do that? It tells you that the trend is strong when the ADX is sloping to the upside and it crossed from below 20 to above 20 and going to the upside, regardless of the direction of the trend, whether it's bullish or bearish. If the ADX is increasing in value and it's sloping to the upside, then that trend is actually strong. Now, one of the mistakes that inexperienced traders make is treating the ADX as a buy and sell signal indicator generator. So they'll just use the ADX simply as, if it does XYZ or whatever the case might be, that's a buy signal. Or if it does something opposite, that's a sell signal. Actually, that's not the use case for the ADX in most cases. You want to be using it to identify the strength of the trend. So if you're trading in the direction of the trend, you could either be a pullback trend trader, which simply means that you wait for the trend to get established, and then after it gets established, you wait for it to retrace a little bit before you enter into the market with the trading position, your stop loss, and aiming for a profit target which is going to be above the previous resistance. Because if the trend is really a strong trend, ideally it is supposed to break above the previous resistance and continue to form a higher high. Okay, so if you're a pullback trend trader, this is the way you approach it. On the contrary, if you are a breakout trend trader, there's no right or wrong approach to this, okay? If you're a breakout trend trader, you're actually going to be waiting for price to break above the previous resistance area, which it failed to break above previously before it started the pullback. And so if it gathers enough momentum to come back to this area and break above that resistance, if you're a breakout trend trader, then you're going to take a trade in the direction of the trend because you're anticipating that after this break, price is going to form a higher high, and so your stop loss is going to be at the higher low, okay? And then you'd be aiming for the higher high. So in this case, you would want to use the ADX indicator to support your hypothesis of what price is likely going to do. And so when you identify the direction of the trend, you would want to see the ADX going from below this level to slanting above and breaking above this 20 level and moving to the upside, just like we had somewhere around here. Okay? So this is telling you that there's an increasing strength of the trend in the market. Okay? So this is another use case that you could use the ADX indicator for. Now, I know you might probably be wondering what time frame is best for using the ADX indicator. Well, personally, I'll tell you the way I use it is I would add it to something like the higher time frames, like the daily time frame, for example, or the 4-hour time frame. And if a trend is showing me that it's actually a strong trend on the higher time frames, what I will do is I would now crank down to the lower time frames and look for trade setups in the direction of the trend, which the ADX on the higher time frame is telling me is a strong trend. So for example, in this case, you can see that price, if we're using the moving average approach, okay, you can see that price is above these 3 moving averages, and the moving averages are in proper order. So the black one is above the blue one, and the blue one is above the red one, and price is above them all. So this is telling us that we're in a bullish trending market. So in this case, if we use this approach where we wait for the ADX to go from going below the 20 line to crossing above it, this would have been around the area where we would have identified that the direction of the trend for the ADX on the daily time frame is bullish. And anything from this moment in time, anything from here where price crossed above the 20 level of the ADX on the daily time frame, anything from here on the lower time frames, when we identify a long trade setup, we would be interested in taking that long trade setup. So let me quickly show you how this would have panned out for a couple of examples, okay? So where's the horizontal line we just added? The red horizontal line. Here it is. Here it is. So this was the moment where we identified that the direction of the trend on the higher time frame is actually bullish, and the ADX is showing us that there's a strong trend in the market. Now, based on this, if we were coupling using the ADX with market structure, for example, then we would have waited for when the market structure will switch from being a market structure for a downtrending market to that of an uptrending market. And what does that look like? Well, you can see that price was forming lows and lower highs, lower lows, and all of a sudden price was struggling to continue forming lower highs. And so it started forming equal lows, and then eventually it broke above this resistance. So now the direction of the trend on the lower time frame is agreeing with the direction of the trend on the higher time frame. You can see even on the lower time frame, price is above the 3 moving averages. And so here, when we had this pullback, you could have easily taken a trade here with a stop loss below here, aiming for maybe 1:3 or whatever your exit trading strategy would have been. And this would have been a clean winning trade based on you using multiple time frame analysis to couple what you saw on the higher time frames with the ADX indicator and taking low risk high probability trade setups on the lower time frames. Okay, so you can do any of this. Okay, and so this pretty much brings us to this week's edition of the end of this week's edition of the ITU Forex class. And I'm really excited about this class because you could use this tool to really filter out bad trade setups, whipsaws, and all of those liquidity sweeps and all of that to improve your trading signals. Now, does this mean that you're going to get win rates above 90%? You don't even need it. And that's not even the case. I keep telling you guys that risk to reward ratios and proper risk management, keeping your risk consistent and all of that is more than enough for you to make a healthy living out of trading. Okay, so you don't need these strategies that will give you 90% win rates, and most of the times they don't even give you good risk to reward ratios. So even if you have a strategy that only has a 40% win rate, if you're making more from your winning trades than you lose from your losing trades, you're eventually going to become profitable after taking a large number of trades. So the win rate doesn't really matter. And so don't assume that just because you learned this and I'm telling you that it's going to help you filter out bad trades, that you're going to trade, all of a sudden 90% winning trades. No, that's not the case. And that's even aside from the point, because even if you were to take, only win 40 or 50% of the trades you take, you'd still end up being profitable if you're aiming. That's why you see all the examples I keep telling you. I keep telling you to aim for a risk to reward ratio of nothing less than 1:2. Because if you do that, even if you lose half the trades you take, after taking a large number of trades, you still come out on top, okay? And so please practice this. If you're intrigued by what you learned, go out there, practice it, put it in practice and learn it and try to improve it for yourself and see how it works. Then we talked about how to build confidence in last week's edition of the class. Now go and simulate this, backtest it, and prove to yourself that it works before putting real money on the line. Okay, if this sounds great for you, that's awesome. And before we wrap up the class, I would like to use this opportunity to let you know about the ITU bots, which are designed to trade for you while you're learning how to earn, okay, using the manual trading techniques of the ITU Forex classes, okay? So if you're interested, please reach out to us on any of the socials or just drop a message or a comment in this under this video's description box, and we'll be more than happy to assist you set everything up and walk you through how to set it up step by step. Once again, thank you for taking time out of your busy schedule to attend these classes. I look forward to seeing you guys in next week's edition. Have a wonderful rest of your week, and God bless you all. Cheers.